I am getting you out of debt. I am getting you out of debt. You are out of debt.
Hey there, I'm Hannah, your no BS guide to smashing debt and owning your financial future. Whether it's wiping out that mortgage, killing credit card balances, or stacking real wealth, this is your episode. Today's topic is the US mortgage debt crisis: causes, risks, and real solutions. Let's dive in and make it happen. Alright, let's talk about something that affects millions of American families every single day, and that's navigating the mortgage debt crisis and creating real pathways to financial independence. Because here's the truth, this crisis didn't appear out of thin air. It's been building over years, shaped by economic pressures, housing market swings, and policy decisions that not enough people fully understand. So today, we're breaking it all down. Let's start with the big picture: eliminating mortgage debt and actually achieving financial independence. Close your eyes for a second and imagine a life completely free from the weight of mortgage debt. No more dreading that monthly payment. No more feeling like the bank owns your future. That life is possible. But the journey starts with understanding what went wrong in the past. Specifically, the lessons from the subprime mortgage crisis and the housing market crash that followed. The Federal Reserve and mortgage lenders have worked to stabilize things since then, designing better mortgage products with borrower protection in mind. But here's the thing, that's not enough on its own. We have to educate ourselves. We have to understand mortgage rates, financial instruments, and what sustainable borrowing actually looks like. Don't become just another statistic in this crisis. Instead, choose mortgage loans that genuinely align with your financial goals and long-term vision. And in the wake of the global financial crisis, knowing the causes, specifically how subprime lending snowballed into a full housing collapse, is not optional anymore. The Financial Crisis Inquiry Report made it crystal clear. Informed choices matter, whether you're a first-time buyer or a seasoned borrower. Tap into insights from organizations like the Mortgage Bankers Association. Understand housing policy and position yourself to make smart moves in both the security and credit markets. Because with the right knowledge and real determination, you absolutely can eliminate your mortgage debt and step boldly into financial independence. Now, let's talk about something a lot of people feel in their wallets right now: rising home prices and affordability issues. Home prices across the US have surged in recent years, especially in major metropolitan areas. And that surge has pushed home ownership further out of reach for millions of Americans. People are being forced to take on bigger loans than ever before, which means higher debt-to-income ratios and less financial flexibility month after month. It's a squeeze, and it's very real. Which brings us to a topic that caused massive damage not too long ago: subprime mortgages and risky lending practices. The 2008 financial crisis pulled back the curtain on just how dangerous subprime mortgages could be. These were loans handed to borrowers with poor credit histories, often loaded with high interest rates and terrible terms. The result? Widespread defaults, a housing collapse, millions of families losing their homes. Regulations tightened after that, but here's what's concerning. Risky lending practices appear to be creeping back. And if we're not careful, we could be setting the stage for history to repeat itself in a very painful way. Then there's the undeniable reality of the impact of economic conditions on homeowners. When the COVID-19 pandemic triggered a recession, job losses and income drops hit homeowners hard and fast. Mortgage payments that were manageable suddenly weren't. Foreclosures climbed. Home values in some areas dropped, and that created a brutal cycle. Debt leading to instability, instability deepening debt. It's a loop that's incredibly hard to break without real intervention and support. Here's one that doesn't get talked about nearly enough: the link between student loan debt and mortgage challenges. Young professionals today are carrying enormous student loan burdens, and those monthly repayments are eating directly into their ability to save for a down payment or even qualify for a mortgage in the first place. The result is an entire generation being priced out of homeownership, which ripples outward and affects the entire housing market from the ground ground up. This isn't just a personal finance problem, it's a systemic one that demands serious attention. But let's shift to some hopeful ground: government programs and support for homeowners. The Federal Housing Administration has played a pivotal role in keeping mortgage credit accessible, even after the housing crash. Programs have been designed specifically to stabilize financial markets and help families still holding on to the dream of homeownership. The Department of Housing and Urban Development has stepped in too, pushing financial products that protect consumers from the kinds of predatory subprime loans that caused so much harm before. With the Housing and Community Development Act guiding policy, the focus is on restoring trust, enhancing stability, and making sure homeowners have the resources they need to not just survive, but truly thrive. And by holding responsible mortgage originators accountable and applying the lessons from the Financial Crisis Inquiry Commission, we can collectively push toward a housing market that is far more resilient and trustworthy for everyone involved. Let's get practical for a moment. Loan modification and refinancing programs. In direct response to the mortgage crisis, the government rolled out several programs specifically to help struggling homeowners catch their breath. Loan modification programs adjust the terms of existing loans to make monthly payments more manageable. Refinancing options give borrowers a chance to lock in lower interest rates and meaningfully reduce what they owe each month. The catch? A lot of homeowners don't even know these programs exist, and that gap in awareness is costing people real money every single month. And speaking of awareness, the importance of financial education in homeownership cannot be overstated. Owning a home starts long before you sign any paperwork. It starts with understanding how to manage your money, how to read the market, how to interpret house price trends, and how to spot a genuine opportunity versus a financial trap. Financial education transforms a vague dream of homeownership into a concrete, actionable plan. It gives you the confidence to move through the home buying process without getting blindsided at every turn. This is not something to skip over. It is the foundation everything else is built on. That leads us into something closely connected: empowering borrowers with financial literacy. Because it's not just about buying a home, it's about managing that debt intelligently for years after the purchase.
You won't believe what I just found out. Check this out. My neighbor asked me a few days ago, "Are you paying off your mortgage the old school way or the new way?" I said, "What you are talking about?" He tells me the old way, 30 years of mortgage payments with over $300,000 just in interest, or the new way. There is a financial program that Debt Free Made Easy offers, which enables anyone to pay off their 30-year mortgage in just 5 to 7 years and save more than $190,000 in interest. Really, yes, I am for real 100% guaranteed. Here's the best part. There's no refinancing, no changes to your budget, and no changes to your lifestyle. Incredible. I was curious, so I checked it out for myself. The results? My 30-year mortgage and all my other debts will be completely eliminated in just 7.4 years, and I'll save over $219,000 in interest, which goes back into my pocket. I will be debt-free and living life on my own terms. Listen to me. If you're trapped in the old way, see how much time and money Debt Free Made Easy can save you. It's quick, easy, and life-changing. The banks do not want you to know this, but don't let them know I told you. The secret is out. Scan the code or click the link below and start getting some of this money back today.
Understanding how interest rates affect your total loan cost, how amortization schedules work, and why the early years of your mortgage are mostly interest payments, and why your credit score matters so deeply in this entire process. All of this puts real power back in the borrower's hands. When people have this knowledge, they make smarter decisions. They avoid excessive debt. They build genuine wealth instead of just paying bills for 3 decades. Now here's something I genuinely want you to pay attention to: the Debt Free Made Simple and its path to faster debt elimination. This is one of the most innovative tools available to homeowners right now, and it connects perfectly with something else worth knowing. Debt Free Made Simple, FinTech program which eliminates all debts: mortgage, credit cards, personal loans, auto loans, and all of it, within 5 to 7 years. This program operates on that same powerful principle. Instead of dragging out a 30-year mortgage and paying hundreds of thousands in interest over time, this system strategically uses your available income to cancel interest more efficiently. It maximizes the financial resources you already have without requiring you to completely flip your lifestyle upside down. The result is accelerated debt repayment, faster equity building, and a genuinely shorter road to financial freedom. For anyone serious about getting out of debt and staying out, this is a tool worth understanding deeply and taking seriously. So where does all of this leave us? Let's talk about the future outlook and what moving toward a more stable housing market actually looks like. Getting there requires everyone at the table. Policymakers, financial institutions, and educators all working together with a shared purpose. That means pushing affordable housing initiatives so that homeownership doesn't become a privilege reserved only for the wealthy few. It means expanding financial education programs so borrowers have real tools, not just good intentions. And it means holding the lending industry to responsible standards so we never again find ourselves in the wreckage of another mortgage-driven collapse that devastates families and destabilizes communities. All right, let's get into something genuinely practical today. Because understanding the mortgage debt crisis is one thing, but knowing exactly what to do about it is a completely different conversation. So today, we're walking through the real problems homeowners and buyers face, and more importantly, the specific step-by-step solutions that can actually move the needle. Let's go. Problem 1. Lack of mortgage knowledge. Many borrowers don't understand loan terms, interest rates, or risky products. Steps. Visit consumerfinance.gov. Free mortgage education tools. Read the Financial Crisis Inquiry Report, free at fcic.law.stanford.edu. Use the Mortgage Bankers Association at mba.org for market insights. Problem 2. Rising home prices and affordability. Surging prices push buyers into oversized loans with poor debt-to-income ratios. Steps. Use HUD's affordability calculator at hud.gov. Target homes where mortgage payment stays under 28% of gross income. Explore down payment assistance programs via downpaymentresource.com. Problem 3. Risky/subprime lending creeping back. Predatory loans are resurfacing with dangerous terms. Steps. Verify your lender at nmlsconsumeraccess.org. Always request a loan estimate form and compare 3+ lenders. Avoid adjustable rate loans unless you fully understand the caps. Problem 4. Student loan debt blocking home ownership. Student payments reduce mortgage qualification ability. Steps. Apply for income-driven repayment at studentaid.gov. Use FHA loans, which allow higher debt-to-income ratios. Check employer home buying assistance programs. Problem 5. Homeowners unaware of relief programs. Loan modifications and refinancing options go unused. Steps. Contact your servicer directly about modification eligibility. Explore refinancing options at bankrate.com or nerdwallet.com. Call HUD approved housing counselors free at 1-800-5694-287. Problem 6. Slow debt elimination. Standard 30-year mortgages cost hundreds of thousands in interest. Steps. Make one extra principal payment per year. Reduces loan by approximately 7 years. Explore the debt-free Made Simple FinTech program for accelerated payoff. Use a mortgage payoff calculator at mortgagecalculator.org. So here's where we land, the conclusion. The mortgage debt crisis in the U.S. is real, it's layered, and it touches everything from rising home prices to student loan burdens to economic shocks none of us saw coming. But it is not insurmountable. With smarter lending policies, genuine consumer education, and strategic tools like the FinTech program from Debt Free Made Simple, homeowners can take back control. They can achieve debt freedom faster than the bank ever intended, build real equity, and step into a financially secure future. That is the goal. That is what this is all about. And with the right knowledge and the right tools in your corner, it is absolutely within reach. If you have any questions or need the sign-up link, feel free to text us at 203-606-3555. It's much easier to reach us by text message and allow us 2 to 12 hours to respond. You can also visit our website, www.debtfreemadesimple.com, for more information. If you're watching our podcast, please like, share, and don't forget to leave a comment about what you'd like us to cover next. I'm Hannah. Subscribe and see you soon. You've got this.
We can eliminate all your debt. Now you know. The rest is up to you. What are you waiting for?